How do you feel regarding Tesla's stock, at least for the foreseeable future? Cathie Wood, since Cathie Wood has always been a fervent supporter of Tesla and has stated that investors closely monitor her predictions on the top e-company stock. You won't want to miss this information. Before a devastating sell-off in 2022 erased ARK's profits, Cathie Wood, an investor in disruptive innovation, focused companies, made millions during the early stages of the pandemic amid the spike in Tesla and other favorites. Despite the fact that the market as a whole was negatively impacted by an unfavorable macroeconomic environment and higher interest rates, ARK is the fifth largest shareholder in Tesla with approximately $487 million, the majority of which is held in its signature ETF. Over the past month, ARK has added more than 300,000 shares of Tesla to its portfolio. Musk's purchase of Twitter and his commitment to the social media company, which infuriated Wall Street, coincided with Tesla's decline. Despite this, Musk remained optimistic during the downturn, predicting last month's Tesla shares would reach $1,500 by 2027, representing more than tenfold increase, despite Tesla's undeniable problems today. According to Cathie Wood, Tesla's stock still has a ways to go and may reach $1,500 during the next 5 years. According to Wood, there are three sources for the increase in their estimated price. I think there are people who don't buy his cars now. She said in a Barron's interview, but if he does what we think he's going to do, on the cost side, there are a lot of people who will use economics as their guide. And I think there are a lot more of those people than there are of the naysayers around Twitter. First, there were the Tesla killers who entered the market as a result of Wood and her company ARK Invest, expecting a Tesla market share to drop from 17 to something lower globally, including China. But instead, it rose to 18 in electric vehicles. This shows us that Tesla is simply miles ahead of the competition. And I'm referring to the BMW here. The Tesla battery cost is 3 to 4 years ahead of any other auto manufacturer in terms of cost declines. So every other auto manufacturer will have to sell their cars at a loss in order to compete with Tesla, and they're losing their internal combustion engine business. So they've got a big problem there. Wood also stated that the Mercedes leads the field in terms of range and other important metrics when it comes to electric vehicles. Wood clarified that most other automakers won't be able to compete with or match Tesla's combination unless they want to lose money on the vehicles. So that's crucial from both a performance and range perspective. When asked about her thoughts on Tesla after 5 years, Cathie Wood said that the company has a distinct advantage over other automakers. She added that if cars are evaluated based on their range and power combination rather than their brand, Tesla is the best option out of all of them. Despite this, she acknowledged that some well-known car brands, such as BMW and Volkswagen, have made great strides in recent years. When asked about her thoughts on big corporations competing with Tesla in the production of electric vehicles, Wood said that they are failing miserably at branding. These other auto manufacturers have brands and a lot of brand loyalty, but I think as consumers start to shift from gas power to electric and look at the specs of the different cars, Wood believes that most other auto manufacturers will not be able to keep up with or reach Tesla's combination unless they want to lose money on their. In a tweet on January 7th, Celebrity Investor, she stated that while they might still be convinced by brands, they won't have as excellent an electric automobile as Tesla would offer. Cathie Wood responded to ARK Invest, head of research, autonomous technologies, and robotics, by saying, the EV opportunity alone is significant. Kuro stated in a sand tweet that Tesla's margins, as it has done in the past, its superior drivetrain efficiency and inexpensive battery should put it in the greatest position to weather any cyclical slowdown in the auto industry. It can also be the first to decrease pricing, which puts pressure on other manufacturers. In response to Cathie Wood's tweet, the ARK executive stated that under ARK's COO, Tasha Wood claims that Tesla can succeed without autonomous ride-hailing technology, citing research by Sam Corris and ARK's. Just the Tesla electric vehicle market has a huge possibility for institutional strategies research, ARK's, and directors of investment analysis, eliminating ride-hailing and autonomous driving, which Tasha Keeney stated in a tweet, will, opinion, account for more than 60% of Tesla's value over the course of the next 5 years in our 2026 pricing. After the split, the target price would grow to about $500 per share based just on EVs rather than a rise in the currency. It should be mentioned that ARK Investment released the updated open source Tesla valuation model in the middle of April. According to the model, the estimated value per share in 2026 is $46,600. But keep in mind that the Tesla model was released prior to Tesla's August 3-for-1 stock split. Today, Cathie Wood claims to be more optimistic about Tesla than ever and has even seen the stock rise 5 times in just 5 years. In fact, ARK is still buying Tesla shares. Following only Exact Sciences and Zoom Video, Tesla is the third most valuable holding in asset manager, Cathie Wood's ARK Innovation ETF. Following multiple purchases made in January, renowned investor Cathie Wood continued to add to her Tesla holdings. On January 18, ARK funds purchased 49,983 shares of Tesla, valued at $6.4 million as of the day's close. This means that Wood has absorbed 806,663 Tesla shares in January alone, valued at $103.9 million as of the January 18th close. However, Tesla shares have dropped 58 during the last year due to concerns about supply and demand. We are as bullish about Tesla as we have ever been. Wood could realize significant gains for the stock just from electric vehicles. She said in a webinar that was cited by CNBC that there could be almost a 5-fold increase in this stock during the next 5 years. If you believe in autonomous cars at all, it's closer to a 13-fold increase. The stock is currently trading at 653, and 13 times would be $16.99. Wood believes that the company's large global pricing reduction are a wise move. The other automakers will have to follow these price reductions, but it will hurt them greatly from a margin and profitability standpoint. Musk's Twitter distraction, as some refer to it, relates to his acquisition of Twitter as well as his controversial tweets. Tesla, she said, will be very aggressive in pricing. Tesla can afford to do this because it has the lowest cost structure and is innovating the most aggressively. Dan Ives, vocal music critic and Wedbush analyst, told Yahoo Finance Musk is the only one who can put out the 5-alarm fire that is broken out in the Tesla shares. The Musk Twitter scandal and his recent demand cracking during his testimony as part of Tesla shareholder lawsuit have created a perfect storm. Elon Musk, the CEO of Tesla, that he believed it was ridiculous to assume that his tweets content may affect Tesla's stock price in order to make his point. Give an example of how Tesla's stock price increased after he tweeted that he thought the stock was too high, notwithstanding the opinions of average onlookers. Maybe take that as acknowledging that his tweets have an effect on market values. Musk stated that a connection could only be made if the stock price dropped after he declared it was too high. A tweet does not guarantee that people will believe it or take appropriate action. Musk continued saying that the CEO did not perceive any coincidental relationship between his tweets and the overall price of Tesla stock. ARK's 2026 price forecast for Tesla shares is around $500 per share, which is more than 4 times its present valuation based only on its electric vehicle. Industry, the prediction accounts for the August 25, 2022 3-for-1 stock split. This provides further information for the $46,600 pre-split price goal set for 2026. The company declared in mid-April 2022 that it is eliminating ride-hailing and autonomous driving from its valuation methodology, according to ARK's analyst Tasha Keeney. According to the firm, over the next 5 years, these two elements will account for approximately 60 of Tesla's value. She added that the 500 per share estimate represents a rise of more than 4 times the stock's current price. To receive more Tesla stock forecasts, please subscribe to this channel.